Welcome back to this week's market drama. The stock market had another up week. It was up 1%. This brings us back to almost flat for the last 6 months and down 15% year to date. So why was the market up? Well, there was one particular headline, which is Fed Chairman Powell spoke at the Brookings Institute conference in the middle of the week. I listened to the whole speech as well as the Q&A, and there was one particular comment he made, which was and this is a quote: "The time for moderating the pace of rate increases may come as soon as the December meeting." End of quote. So that's what the market loved, because it solidified this idea that they're not going to keep raising interest rates to 75 basis points, but it's going to be more like 50 basis points or 25 basis points. And the market rallied big after his speech. But the interesting thing is that I listened to the whole speech. One, the market was already pricing 50 basis points. The probability of 50 basis points was already priced in. But I feel like the market is Gigi in the rom-com from 2009. He's Not That Into You. If you haven't seen it, classic. You should go watch it. Gigi consistently misreads all of her romantic partner signs, and she's like constantly thinking that whatever they say is like a positive sign that they're into her, and then we find out they never call her back. And I feel the stock market is GG, right? Reading anything that the Fed is saying that could mildly indicate that it's positive for the stock market's like, oh my god, I knew it, Powell's into me. And I don't see it that way, right? He kept emphasizing in his speech that we will keep at this until the job is done, meaning the job is done is bringing inflation back to 2 to 3%. It is nowhere at 2 to 3%. He did not say they're pivoting or bringing down interest rates. He's just saying they're gonna hike, not at the highest rate of hiking that the United States has seen in over 50 years, right? Like, I don't know, that's like a positive sign. But that was earlier in the week. Later in the week, the stock market dipped from like the highs of the week, because on Friday we saw payroll numbers come in at 263,000 gains for November. That's a bigger gain than the 200,000 that the market was expecting. On top of that, average hourly earnings, which is a metric for wage increases, came out at a higher than expected 0.6% growth month over month, which is annualized is 5.1%. So the market sold off because it was kind of on Friday, because it was a reminder of like, oh, wait a minute, like wages are still pretty sticky, and if wages don't come down, maybe the Fed can't, lower interest rates soon. So that was that. That kind of again reminds me of like maybe the market's misreading what he's saying. But on top of that, there's a number that was kind of hidden in the employment numbers, which is the labor force participation rate. That's the share of Americans that are either working or actively looking for a job, and that key metric fell for the third month in a row. Is now at 62.1%. And why is that relevant? Well, the reason that this number keeps falling, like a big share of the reason for this, is that the share of the population aged over 64 has been increasing significantly since 2010. And those are the baby boomers that continue to retire, and that implies that the workforce will keep shrinking relative to the population, and that's like that is a trend that's not going away. These people are putting up their cleats, right, and going golfing. They're not going back into the workforce, and as a result of that, I believe, and this is not just me, right? There's many that are looking at this data point and saying economic activity will need to run at a lower level to avoid persisting wage increases and price inflation. So in other words, the Fed's going to have to like really keep interest rates higher than maybe the market's pricing right now, because they'll need a recession to bring that unemployment rate higher so that they could bring down wage inflation. That's a headline again that I don't think is getting enough play, and it's something that we're going to have to keep an eye on in the coming weeks, in the coming months. Okay, and then for next week, what do we have to look forward to? The Labor Department on Friday releases the producer price index, and that's supposed to be up 7.2% year over year. It's another data point around inflation. You'll see a trend here every week. I keep talking about inflation. This is the one economic factor that the market's watching very closely outside of every move and every word that the Fed Chairman Powell mentions. All right, that's it for this week. Stay tuned for next week.